Hey, Kara Oosterhuis here with RealAgriculture.com. We're back here today with another RealAg Live episode, and we are talking markets today. So if you have any questions, comments, whether you're watching on Facebook, Twitter, Twitch, or YouTube, please put it in the comment box, and we will get right to them. So let's bring in today's guest here. I have Neil Townsend, who is the Senior Market Analyst with Farmlink Marketing Solutions. How's it going today?
Going well. It's we had a little bit of snow here in Manitoba. We've been trending very dry, so we're supposed to have 2 snowfall events this week, which should be a little bit of something. Again, crops aren't made or lost in December, but every little bit helps right now, considering how dry we've been.
Oh, absolutely. I'm in southern Alberta, and it looks like across the prairies there seems to be some snow coming, and it's kind of interesting timing. We might have a white Christmas, so we'll see. But so getting into some markets talk, probably the most recent current event would be this weekend, UK announcing that they're shutting down any travel. Can you talk about this morning? The grain futures had kind of bounced around a bit. Can you talk a bit about the initial impacts?
Yeah, I think it sort of harkens back to that old, probably everybody had to read it in high school, sort of a tale of 2 cities. It was the best of times. It was the worst of times. Like, truly, I think in Western Canada, like if you're a farmer, generally we've benefited from COVID-19. That being said, we do want to see a light at the end of the tunnel because of the other consequences of COVID-19. But yeah, news that, there's a mutation in southeastern England, and just the fact like they're shutting the borders down and no flights, and it's a very concerning time. And it just goes to show, I think, like that the market remains on edge about that. There's a whole confluence of events that have been happening. Like, it's taken a long time for the U.S. to get the second stimulus package together. That seems like it's done. Has the market priced that in, or will there be more? What's happening? And I think just news on the English front, and it just unsettled the market for a while now. Again, people are reassuring that, it's a higher infection rate maybe, but it's not any more lethal. We're still discovering things about COVID-19, and it's just, I'm ready for it to be done personally.
Yeah, I don't know if I've talked to many people that are like, I could keep riding this out for a while. No, I think we're all kind of ready for it to be done, especially now being around the holidays and all that brings. But in other current events, we've seen some protests in India. Can you talk a bit about how that has impacted the market stage?
Yeah, I think that's mostly something to watch, but not like a direct impact. There have been ongoing protests in India. It's an interesting thing because it's very like, unfortunately, our prime minister kind of waded into it and made some comments or made some things that looked like he was, really commenting on domestic policy in India, which, is general rule of thumb, unless it's like, a really big human rights violation. You should keep your mouth shut on domestic policy. One thing I will comment that's fairly interesting about the Indian protests is they're overwhelmingly led by Sikhs. And, the Sikhs only represent actually like less than 2% of the population of India. And, they are the predominant group in the Punjab, and they have a lot of farmland in the Punjab. But in the rest of India, they're not a very dominant group. They sort of hit above their weight politically. But I wonder, because, Modi and his party is so much around Hinduism and a Hindu national party, like it might not be engendering the level of sympathy that the press seems to think it has here. Because again, in Canada, we have a lot of a diaspora from the subcontinent there in Asia, but we also have sort of a disproportionate amount of, Sikhs, and the Sikhs again have, fairly good political presence in Canada that again, we might be seeing it as maybe a bigger issue than the Indians actually see it in terms of a combating farm policy. And that's the one thing I'd like to discern over the next couple of weeks is just, how widespread is this movement, and And are there other farmers or farm groups or other areas where maybe it's not quite as contentious as it seems to be? I mean, certainly when you hear about logisticals and access to New Delhi and those types of things cut off, and it is a proposed major change, although it doesn't sound like it's absolutely concrete what they're going to be doing. But again, I wouldn't suggest that Prime Minister Trudeau kind of comment on it without being invited to comment on it by the Indian government.
Do you see this changing any demand at all, or not so much?
Well, again, India is one of the countries that's been hit pretty hard by the COVID-19. I think that boosted the demand a bit. Now, what I will say about India is I think in Canada, especially in Western Canada, we make the mistake of thinking that the Indians make policy with Canada in mind, but they don't make policy with Canada in mind. They make policy with India in mind. And there's two general policies that they're trying to balance when it comes to farmers. Like the first would be income security, and then the second one would be, broadly speaking for the entire country, food security. And sometimes those are paralleled and sometimes they're in opposition to each other. I think that COVID-19, it's been a big financial strain on India, as it's been for many countries in the world. They were giving a lot of food support. And, as they progress, they're just probably running down the different policies they have in place. And, the worry is that they can't afford to do them all. At the same time, they need to have food affordability. And really, when you think about the Indian farmer, he's actually in both groups. Like he needs income support and he needs food security. And so, the income support is raising the prices of what he produces, but the food security means kind of lowering the prices of the food that he doesn't himself produce. So I think long-term structurally, India is going to be a very interesting country to look at because, as opposed to Canada, farm size in India continues to get smaller as, the farm is passed on and broken up between multiple siblings of one parent. And that I think is causing, a great strain on being able to afford to be a farmer without having a supplemental income. And I'm not sure if it's having a huge impact on productivity. I don't think so as much. I think that's more of a water and weather type of situation. But in terms of a farmer being able to kind of like provide for his family, I think there's a little bit of stress going on there by farm size getting smaller. And again, just, globally speaking, we've gotten pretty good at producing things. Now, 2020, 21 has been beneficial for prices, but that could flip. And, the numbers that are coming out of India right now in terms of planting progress and the acres that are going in the ground are pretty encouraging for, a fairly large production. Whether it will challenge sort of record productions, that remains to be seen, but it's a good start they've gotten off to.
So sticking on the worldwide stage, Russia has recently implemented a tax. How do you think we're going towards a trend of kind of protecting our own commodities first before looking elsewhere at export markets?
Yeah, like that's a great question, Kara, because I think like one of the challenges if you're a Western Canadian farmer right now looking forward, to the shorter, medium term, like 5 to 10 years out, is that we've gotten into a very bilateral world. And people basically just, what's good for them is what they impose upon, their farmers or their institutions. And we can't negotiate with a group. We have to negotiate with each and every party. Now, in the Russian case, I mean, we prefer them to have export restrictions because, they are a major competitor to us. But, like it's just simply a function of what's going on in Russia. And in Russia, most other parts of the economy are under significant strain. Like they're a big energy producer, energy prices aren't high. They don't really have too many consumer products. I mean, it's even been noted that, they used to be, for years, they were very well known for military equipment, but the agricultural production has actually outpaced the military exports in the last few years. They don't have a lot of economic options. So, farming is the one that they have to watch for. But in the meantime, the ruble has gone down because, inept governance, and the prices have gone up. And again, Russia's a country where, you see the shining lights of Moscow or St. Petersburg. But outside of those two, there's a lot of people who are very food insecure, who are very income insecure. And the government, they do provide a lot of bread for people out in the hinterlands, and the hinterlands of Russia are obviously extremely large because it's a very large country. So, and the other thing too is the feed industry in Russia, the livestock industry has a lot of influence. So, they're also pestering the government to put these restrictions in place. But yeah, I think that, when you get into a year like 2021, you're going to see more of that because obviously, the buzzwords this year were number one, resilience, but number two, I think food security has been a huge issue in agriculture, and that will persist. And I think it's going to persist as long as, COVID-19 is with us, and it probably has to persist through until we get like a bumper crop. So like 2021 production is going to be pretty critical to, ease concerns in the world about, whether or not there's enough food to go around and just, prevent food inflation from being a major story going forward.
Absolutely. So taking a look, a bit more of a domestic, North American stage, I guess, right now. I guess not even just. I'm trying to say oil seeds. We're looking at it's been an incredible market out there right now. They're really they're just booming and they're still going. Can you talk a bit about the uptrend in these oil seed markets and maybe why that is?
Yeah, I mean, I think if you wanted to look at a date on the calendar that probably started some excitement, was August 10th when that derecho ripped through Iowa and a little bit of Illinois there. I think that, soybeans had maybe started to move up a little bit before that, but that kind of cemented the journey upwards. And it just kind of shaved off what I would call the incremental ton, that ton that gives you a little bit of a buffer. And, by reducing the yield prospects. And I mean, again, I don't know how many bushels got destroyed in that derecho, but, might have only been 50 or 60 million bushels, but it set people on a course. And then just with, the tremendous buying of China for soybeans, we've gotten into a predicament here where just generally speaking, oilseeds, and also, this is one that we don't follow as much closely in Canada. I'm by no means an expert, but what I do understand about, the palm oil is that, that has been something where there's been strong demand for palm oil. And again, sort of those incremental tons have been reduced because of labor problems related to COVID. And so that, there wasn't maybe as much palm oil on the market as there maybe could have been. And then, of course, we come to canola. And I mean, I think we're all sort of surprised by the 18.7 million ton production, that the number that the, Stats Canada came out there in early December. And we've seen very strong demand. We don't seem to see too much evidence of the Chinese sort of being biased against Canada. I mean, they haven't, formally stop being biased against the two companies, but they're buying, canola. And then we've seen just enough of an uptick in demand for canola oil in Mexico and the US and in Canada and other places. And canola meal has been placed really well that, we're in a very, very strong market. And again, just the US export flow for soybeans. And again, they had another humongous export inspections reported this morning. This is very supportive, and with just a little bit of weather concern about the South American crop. And I mean, it depends on not just the day, but the time of day or who you read, whether the crop's in peril or the crop looks great or what. But, it's keeping the market interesting. But I think it's very important for Canadian farmers and the Canadian industry to realize that, this is the sort of perfect storm. Like, you have a demand story and you have a supply story. And, perhaps the supply story will start to ease if the South American crop looks better. But for canola, we don't get a meaningful supply recharge until, sometime in late August of 2021. And last time I looked, I mean, we've got 4.8 million tons of exports, according to the CGC weekly data. We've used up 3.9 million for domestic disappearance, according to the CGC data. Maybe that one's a little bit more speculative, but that's a lot of canola in only 19 reporting weeks. And the farmer deliveries have been strong, and the canola that's within the system, not in farmer hands, is still a significant portion. So I think things are, they're very, very interesting. I mean, again, when you have that Icarus moment and you touch the sky, at some point, it's over. But, I can't predict when that is. And I still think there's upside because we have not been successful at killing demand yet. And price is the blunt instrument of demand destruction. So I think price has to go a little bit higher yet.
Wow. Speaking of demand on the soybean side, do you see any of the big in the soybean belt and the corn belt? Do you see any U.S. producers actually, skipping some of these agronomic practices where they might have gone corn, soybeans, and now they, might go soybean because of the demand and the price out there right now?
Yeah, I mean, I definitely think there's going to be, again, one reason why I would be supportive of canola prices is I still don't think that we've heard the final, report on the battle for acres in the United States. I think that in January and February, and again, one X factor would be what's the state of the South American crop at that time, but we might see like a considerable, uptick in battle for those acres. Now, when you talk about rotation in the US corn belt, it's very interesting. Like there's a lot of farmers who are corn on corn on corn on corn, like 5, 6, 7 years in a row. And that's usually the land that's the land that you have to pull out of going back to corn and over to soybeans, right? And again, you need about a 2.6, 2.7 ratio. We used to think of it as 2, but it's gone up over time in favor of soybeans. But I would say that, I think we're right around about a 2.5 something or other right now. I mean, you can check my math, I might be wrong, but I would think that we still need to get maybe to about a 2.7. But corn in its own rights is going to end with a much tighter balance sheet than it's had in several years, much more exciting balance sheet than it's had in several years. And, like, whereas the soybeans in the United States have been sort of big export inspections with less sales now. Now it's big corn sales. And, that's a big prospect of a lot of corn that's going to flow out of the US here in the next 3 or 4 months. So I think it will be very interesting. And again, I think we probably have 30, 40, 50 cents in corn, and we might have another $1.50 in soybeans to go before we get to where we balance out. And the acreage mix will be pretty exciting because, I mean, I think that, every bushel that gets destroyed in terms of usage, like either crushed in the US or exported above and beyond where the USDA currently is, just means that, there's a bigger urgency to get a bigger crop next year. Now, if the South Americans pull off a record crop, which is probably the most likely outcome right now, if you're a betting person, that takes a little bit of the excitement out of the market, but we don't know. We don't know. And again, I will also preface this by saying that a significant portion of the United States right now is experiencing some form of drought. Now it's just kind of on the edges of the main corn belt, but we forget that places like North Dakota, which has more drought showing up, there are some soybeans growing there. There is corn growing there. So, every bushel is going to matter. So, the higher proportion of the map that looks like droughty, it's going to be exciting. And, I was looking at the North American drought monitor that they put out there. And, for I guess late November, December, whatever of 2020. And, the closest one that I could come to, and it wasn't quite as ugly, but was 2011. And we all remember what 2012 was like. Again, let's say we don't have a drought to the 2012 proportion, but let's say we have 70% of that type of drought. There's a long way to go. I mean, 21, 22 will be even more exciting than this year. That's all I'm going to say at that point.
So do you see any sort of rally with the corn market at all next year, or like what do you really predict that way?
Well, I mean, again, it sounds very trite to say this, and it sounds like, it's an easy answer, but it really depends on the weather. Like, one thing I would say is I think that there's an overall trend in the world now, despite all of the, lots of pronouncements about, like alternative meats or laboratory grown meats or whatever. Like, the protein industry around the world is pretty vibrant. There is a strong demand for, feed grains, and ethanol is not going anywhere. Ethanol should recover even, one of the stories in 2020, 21 currently is that, the US ethanol industry probably recovered a little bit faster than we thought it would. And again, we would probably see an uptick in driving next year because think of all the pent up demand to take a trip somewhere or to do something like that, or to drive across the United States or across Western Canada, go see a grandma or grandpa that you haven't seen in a while. So, I would probably predict that like economic utilization of biofuels will probably be pretty high in 2021, in 21, 22. But, like the one thing I would say, if I were sort of, where would I put my money at this point? I would put it probably, in a position where, like, I wouldn't bet on a complete sell off on corn, because I do think the conditions in, the sort of the western part of the Corn Belt are dry. And I mean, there's no guarantee that we get rain. I mean, there is no guarantee. There's no guarantee we don't either. But I mean, and you can't kill a crop in December, but it's exactly like South America, where it's in a deficit. That's the concern. And so yes, rain events can happen, but you need to have those things. Now, the counter argument would be that the modern seed is being designed to tolerate stretches of time without water, and all that matters is not the total amount of rain as much as the timing of the rain. So maybe 2021 we'll see very good timing of the rain and everything will be fine. But just at this moment, I can't predict that. And I would say demand will be on par with this year, especially for livestock feeding.
Yeah, absolutely. So question coming in here, with all these protectionist taxes put on across the world, are they doing this because there might be a bigger commodity bull at work?
I think there's no real, we put a lot of faith that our governments are being run by, people who make decisions in a very forthright manner, in a planned manner. Like I'm the opposite of a conspiracy theorist, because I just think like the human being is too stupid to have a conspiracy, right? It's like, we sort of are very reactive. We don't plan forward very good. And I think that these export taxes are more reactive than any sort of long-term thought out process. And usually if you look at them, you'll notice that they end up happening too late like they end up being sort of like economically inefficient. Like they're going to be economically inefficient anyways, but it's like, if you're concerned about the supply and demand, or you're concerned about prices rising, well, you have to put those protections in earlier. You don't wait. And it's just like, we're doing this with COVID-19 right now. It's like, we need a lockdown. The lockdown starts in 2 weeks. And then, you see everybody kind of like in England, the lockdown in London started at midnight on Saturday, and, all day Saturday, like thousands and thousands and thousands of people left. So I don't see it as a bigger signal of a bullish market. Now, one thing I will say is, if you're sort of like balance of probabilities, it really appears that U.S. policy in 2021 is going to be inclined towards a lower U.S. dollar. They're just getting started on their stimulus. They're not going to leave that to chance. They are going to paper the United States with money. And once they sort of get rid of the sort of, the obstacle of Trump, I mean, they'll find a way to do it. They're going to have to do lots of negotiation with the Senate if the Georgia races go Republican or whatever, but they're going to get a lot of money out there. I mean, I'm predicting probably $2-3 trillion of incremental spending. I think the US dollar is probably going to go down. Not an expert in that. I always say, if I was an expert in the foreign exchange, I'd be living on a giant yacht partying with Leonardo DiCaprio, not like sitting here. But I would say that you're probably wise to forecast a lower US dollar, and a lower US dollar generally implies higher commodity prices.
So taking a look at some of our more local domestic crops here, can you talk a bit about our pulses, specifically chickpeas? Now, chickpeas have been on a kind of a low run for the last couple of years. Do you see any promise going forward for chickpea prices?
Yeah, chickpeas are an interesting one. I mean, like on the one hand, I mean, if we just contain it to North America, I mean, what's a food group that's sort of showing like lots of interest is, hummus. Hummus has kind of come up to be a bigger production. I mean, they've got dessert hummuses now, like chocolate flavor and, caramel flavor and all these kinds of things. And people are consuming more hummus. And I mean, hummus is sort of like a, it's a great entry point for somebody who's a little bit concerned about, starting a non-meat based diet. And we've seen it, but we haven't seen really like the similar sort of, ascendancy of chickpeas. And even globally speaking, I mean, the chickpea balance sheet doesn't look particularly loose. And when you go and talk about the higher caliber, more, the ones that Canada tends to try to raise, I mean, those look pretty good, but you just can't get traction on them. And part of it is, I mean, there is some artificiality with, not being able to have access to full unfettered access to the Indian market. Part of it is a little bit of competition from Australia. I mean, they grew a bigger crop. I mean, not a great big crop, but a bigger crop. So we think that, there'll be a time this year where there'll be a good marketing opportunity for chickpeas. But again, no guarantee on that front, but just that, we think there's going to be a better opportunity for it. And we would still say that, the supply and demand balance sheet, both globally and internally in Canada, are supportive of a higher price.
And on the red lentils front, we've seen the number go quite high back in November. If you were a betting man, if we're looking at new crop prices that come out, a couple weeks in January on red lentils, and they're at say 26 cents, would you recommend buying for some of that new crop? Or I mean, selling, I guess, is the word I'm looking for.
Yeah, I mean, red lentils are an interesting one because, like, again, there isn't, the balance sheet is in the favor of the farmer right now. But, it also depends on demand. And we've seen maybe, one factor in some of the, easing off of the price is obviously Indian policy. But the other factor would be maybe like, a lack of containers, which has probably had a dampening impact on like, the pulses in general, that because containers are backed up and they're not really readily available. That situation might be easing somewhat now, but that's been a little bit of a problem. But for red lentils, like 26 cents is sort of our forecasted price for new crop red lentils. We're not inclined to sell immediately, but with our forecast price, like if we were able to scratch out a 27 or a 28, we probably would be inclined to make a, somewhat of a sale right there. But, like one thing I think you could say, Kara, is that like the pulse crops in Canada are probably not doing a great job right now securing acres for 2021. And again, I know a lot of it's rotation, a lot of it's, like, people don't totally abandon this or abandon that. But I think, like, for example, feed barley, it's clearly profitable for new crop. And people are, they're interested in it. And they're interested in it from, like the Lethbridge area all the way through, to east of Saskatoon, right? Because that's a profitable crop. So, if you're talking about sort of your last like 360 acres or something like that, like, where you can push like a demand balance sheet, supply and demand balance sheet from sort of like, tight to loose. It seems like, barley's securing a lot of that incremental acreage right now. And obviously, I mean, people are very excited about canola. I mean, I don't think we've seen fair market value prices for canola new crop. Like, I don't understand how there can be such a discount. I mean, we haven't put a single acre in the ground. We don't have any read on what's going to happen. And I mean, one thing we do know with absolute certainty about 21, 22 is that we're going to crush, 10 million tons of canola. So, like that's at least half the crop that's needed next year. So I think pulses, I think so often the pulse market doesn't do the best job of sort of like forward projecting what we might need, right? Like it's sort of like you just get one day you wake up and that bull market is totally over or the bear market's totally over. And that's why there's a lot of bins in Western Canada that have been filled up with different pulses for several years at a time sometimes. And they realize that that's how it goes. Now, red lentils, I would be a little bit, that's one that could see some decline in opportunity. And that's just based on, even if it's not one for one, like red lentil production, it's just like the overall pulse production in India will matter. And as I said, they've had a, successful planting sequence so far. They've got enough moisture to definitely start the season. And, it all just, they've had sort of a off production of pulses in general over the last 3 years. Nothing like absolutely critically horrible, but enough to kind of tighten their supply and demand balance sheet. So I would watch that one very carefully. And if you're planning on growing red lentils, and this is a long answer, but this is the final point, probably the most important point about a lot of crops is that, I would say one thing about, say, your first 30% of your expected production in 2021 for all crops is it's going to be important to ROI at good ratios. And I think that one thing you could look at is, maybe 26 isn't like 32 cents for red lentils, but it's better than 18 cents. And it also ROIs quite nicely. So, if you're doing your rotation, and my first and foremost advice to all farmers is, I think one of the great risk management tools of Western Canadian farmers is the rotation. So you should generally stick to your rotation. I would say, it would be worth probably protecting that first 20 or 30% and just locking it in at an ROI that's positive, because, there's definitely, I don't think it's a huge probability, but there is definitely a probability that, 21, 22 will be a year where prices will be in significant inverse to where we have for 2021. And that's just, every farmer all over the globe is getting, incentivized to be a good farmer in 2021. They're seeing strong prices, and I think Canadian farmers are the best, but I think that the gap between Canadian farmers and your guy in Mozambique or your guy in South Africa or your guy in Ukraine or Russia, I think it's narrowed quite a bit. So farmers know what prices are, and they're going to be trying to hit it out of the park next year on yield.
And what about the outlook for wheat, especially looking at like spring wheat or durum? Can you talk about those markets?
Well, first I'm going to make one comment on wheat for 2021, the current year. I still think wheat is sort of, especially in Western Canada, I think it hasn't got fair shift. I think that, the wheat numbers are strong. I think the demand for Canadian wheat is very strong. I think the world balance sheet of wheat favors Canada in the next sort of like 5 or 6 months, because we're going to be one of the places that has a long supply. And I think that, we haven't seen a complete end to the food security issues. So I think wheat still has a couple moments to shine too. And I think that wheat sort of gets caught up as a collateral damage in the battle for acres in a good way, because I think that, one area where you can put incremental acres of soybeans and corn is in North Dakota. So if those encroach on sort of like the spring wheat areas, then the spring wheat areas have to move a little further west, which encroaches on Durham. And so we could see some excitement there. For new crop wheat, I mean, again, I think that, there's strong incentive for a lot of countries to plant wheat. I look at just one country that's sort of, they've just recently extended their zero tariffs, Turkey. Like Turkey will want to have a bigger wheat crop. Russia, they've got sort of, the prospect of some winter kill. We know that the European Union is going to produce more. So I think like, I don't see a drastic sell-off in wheat from where we are today. Like I would say that, other crops have more risk, but we're looking at sort of we use the basis point just outside of Saskatoon, and, our current sort of projection for new crop wheat. And I think there'll be people, certainly if you phone up the line companies, they will laugh very hard and they will say, no, that will never happen. But we're looking at a $7.25 price for new crop wheat. Again, what that says to me is if you see a bid out there that's in that $7.25 range, and again, as I say, we're in Saskatoon, so you got to take your freight off between that. So in some areas it's going to be a $6.75, and in southern Manitoba it's going to be a $7.50. But that's a good place to start for wheat. Farmers are reluctant to sell too much wheat forward because of quality and that kind of thing. On the durum front, I mean, I think definitely like, durum, we see in the European Union, for example, that they're expecting to harvest, 900,000 tons more next year than they did this year. I think durum is one that runs a bigger risk at the pantry preparedness. Like people have bought a lot of pasta, they put it on their shelf. Maybe they didn't get to eat it, so maybe, they miss out. But again, it will really, be dictated by, what happens in Turkey, for example. And then the other thing I would say is like, parts of Mexico right now where durum is produced, unlike last year at this time, have they're under stress. There's a bit of a drought there. and also the western half of North Dakota and into Montana. And southeastern Saskatchewan is also moisture deficit. What will it look like when we get to the planting sequence? We don't know. But I think durum is, expect a correction of downwards of about 50 to 75 cents for next year. So if you, if you look at the current price and the gap between the current price and the new crop price is less than, say, 50 or 75 cents, that's where you'd probably want to, think about selling a little bit. And again, on the ROI perspective, I think, an $8 durum sale in the first 10 or 15% of what you expect to produce is probably a nice place to start if it's available. When I mention prices, I don't know if they're actually available. I'm just saying where I would be inclined to sort of get off my couch and make a phone call or send out an email.
Absolutely. Is there anything else you kind of wanted to add before we wrap up here?
Well, I can't. The only other crop I wanted to mention was maybe oats, and I just say that oats is another. This is a good year for Canada, so we got a lot of very good news stories. So we don't have to go hunting for more good news, but oats is one that's definitely good news. And oats sort of, I mentioned earlier hummus, but oats is experiencing the same sort of demand-driven increase in. There's just a bigger demand. It's now pretty much the preeminent non-dairy alternative. It's growing in shelf space. It's growing its share of the non-dairy fridges in the U.S. And I think it's going to be a really good one. If we could ever get phytosanitary approval into China, that's probably another 500 to 750,000 tons of exports a year. It's chugging along. It hasn't happened. If you know any oat grower people or are involved in that, or the government, you might want to ask what's happening with that. And then the other concern with oats is it's definitely one where, again, and it could be the tip of the spear that farmers have to prepare for, is there is certainly a sensitivity about glyphosates and the phytosanitary aspects to it, and that's something that can turn pretty fast in the sense that people are accepting it today, but they're not going to accept it next year or the year after. And it's probably a question right now of whether or not the demand is growing so strong that they can afford to put in all those sort of phytosanitary concerns and ban the glyphosates. But I think oats is something to watch for. But I also think oats is in stiff competition with feed barley for acres. And, if you're going to grow those things, I think it is important to sort of ROI them and make some forward sales on those in particular, because, all farmers can read the same signals.
Yeah, absolutely. Well, thank you very much for all your insight today. It's been great having you on here, and it's always great to kind of see whether these predictions come true and what exactly happens. So thank you very much.
Yeah, I think that's a very important thing you say. I just want to mention one last thing, Kara. And, in our industry, we do a lot of what's resulting. We look at what happened and then we think, oh, that was great or that was bad. And it's very, very important to watch, in humanity, we're often right for the wrong reasons and we're wrong for the right reasons. So, again, we're just at Farmlink, me and my colleagues, we just try to look at the fundamentals. We try to look at the trends and we try to, predict what happens. But again, we didn't predict COVID-19. We had this year as going to be sort of a part and parcel of a lower for longer trend that we see sort of dominating in agriculture as farmers around the world really capitalize on yield improvements and, sort of a flattening of that curve in terms of yield disruptions brought on by weather due to technology, just better seeds and better farming practice. So, we didn't see COVID-19 coming. We didn't predict that it would be so high. Now we have to adjust. And, later on when we sort of look back at the year, me and my colleagues will kind of say what is it that we missed? Where could we have improved that? And again, farmers should just always think for themselves. But the most important thing is remember, and I don't want to preach to people who are much more experienced than I am, but just remember, I always think of farming as a multi-year thing. If you miss the ultra highs of any one year, if you stay in business, just go talk to your grandpa or your dad, depending on his age, and ask about, what farming was like in the 70s, 80s, and parts of the 90s. It was sort of a one good year in 5 or 10 years. And I hope we never get back to that situation, but there's potential for struggles in the future.
Absolutely. And I think the hard part, I mean, you could probably attest to this, but the hard part with COVID-19 is when exactly these vaccines will be out to everyone and when exactly we'll be back to our normal or whatever it is. So, for sure. And Jim Hale has one more question. He says, will Neil finish his basement in 2021? That's the real question here.
Well, this is actually, I'm downtown Winnipeg. This is the Farmlink head office. We've got, I don't know, 10, maybe 12,000 square feet, but, usually there'd be about 20, 25 of us here, but I've had sole access to the office since basically the start of the pandemic. And I've got 3 young kids at home who like to make a lot of racket. So I'm paid to think, and this is about the only place I can think. So yeah, but it's a great space. If you're ever in town when the COVID's over with, come down and visit it, because this maybe doesn't do it justice, but it's a grand old building, probably like 120-year-old building, and very nice.
Wow, that's awesome. I know, yeah, once things get rolling, I tend to end up in Winnipeg, so definitely will stop by at some point. But thank you very much, and I'm sure we will talk to you soon into the new year.
Thank you very much. Keep up with the great work.
Thank you. And thanks everyone for tuning in today. We always appreciate your questions and comments. It's always great to have you along for the ride. Be sure to tune in tomorrow. I will be hosting again on Facebook, Twitter, Twitch, YouTube at 1 o'clock Mountain, 3 o'clock Eastern. I'll have Emmett Sawyer, who is a young farmer, on to talk about some of his experiences he's had and how he is pushing forward in agriculture. So looking forward to that conversation, and be sure to tune into that one. And for the rest of you, have yourselves a great rest of your day. And if you are across the prairies, stay safe, stay warm. There is some snow coming. Thanks.